Here is your after-hours market recap from Monday, April 27th. Let's jump right in.
So we hit new highs today, which sounds great, right? But underneath, there's a warning sign.
The S&P 500 and Nasdaq both notched new records. The Dow, though, lagged a bit behind. And here's the real story. Those new records, they were built on some super narrow leadership. You could really see this play out inside the tech sector. It was basically a tale of two techs. On one hand, semiconductors that were hot last week took a hit, but a few megacaps kept things afloat. And Micron was a huge standout here. It completely bucked that chip weakness we saw elsewhere. Okay, so let's zoom out. That split in tech, it really mirrored what happened across the entire market. Communication services really led the charge today, thanks to names like Alphabet and Verizon. On the flip side, consumer sectors were definitely weak. This really points to some concerns about spending. Now, some individual stock stories really hammered home that consumer weakness theme. Take Domino's Pizza. It was the worst performer in the S&P 500, dropping hard on weak results. And this weakness wasn't just about pizza. It definitely bled over into the discount stores too. You saw significant selling pressure hit Dollar Tree, Dollar General, and even a giant like Walmart. Then after the bell, earnings came out, and wow, we saw some absolutely huge after-hours moves. So with all that in mind, what's on deck for the rest of the week? Well, that narrow leadership is about to be tested. We've got huge tech earnings and a Fed decision. Which leaves us with the big question. Can this record rally actually hold on at such a narrow base?